Hello and welcome to another episode of Monday Markets. As always, we're brought to you by Woo. Links available in the description below. I'll try to keep it brief because not a lot has happened on the BTC and ETH front. So for BTC, it's still the same consolidation, essentially between 60 and 70k. I've taken the monthly highest close and lowest close to get a consolidation here. And if we look at that on the daily, that's essentially been where the market has been trading. If we take last week's Monday markets range of lowest close, highest close, you essentially get the same picture, just with slightly more generous zones, which I don't think is bad, especially if you're spot trading or medium time frame. So if you're spot trading and or medium time frame, not a lot has changed, which is unsurprising. The last bit of relevant commentary was around the range midpoint on Casual Friday and the Monday Markets episode that followed. And the argument there was essentially that given we've had so much time spent at the range low and so many different setups, if the market is really strong, then it should really hold the range midpoint and not the extremity. So that's a rare exception. In general, when you have these long consolidations, the better areas to do business are the extremities, which is at or around the range high, at or around the range low. And the reason for that is when the market is trading in the middle of the range, at fair value, at the mean, at the point of control, at equilibrium, whatever you want to call it, the basic premise there is that this is essentially a balanced market, and you're not going to get many inefficiencies in the form of breakout traders, breakdown traders, stop orders triggering, so on and so forth, whereas you're more likely to get stitch ups at the extremities. And so that's where don't diddle in the middle comes from. It comes from the premise that the middle is essentially balanced or fair value, and you're going to get better setups, more dislocations, inefficiencies, panic traders, puking traders, force trading, sloppiness in general at or around the extremities. But in this instance, this is kind of a rare contextual exception because one of the range boundaries was so battered, and at this point both of them are battered. And that's all to say that I think the next so-called exciting update will be either at or around one of these extremities, or in this instance, given that the range midpoint is essentially the only support, I would have to trade here. So if we start trading there and the update video is similarly boring to this, you can call me out on it because I think those are the relevant levels. But where we are at the moment, we've had a range higher reaction, nothing crazy to write home about. But you know, this isn't a high conviction area for any fresh positioning. And even from an update point of view, not a lot has happened. We essentially moved from range midpoint to range high, and that's it. We've had a reaction without breaking anything. So that's essentially my map for BTC. If I had to think of what future setups might look like, at least in the medium term, it would either be a failed, well, look, realistically with this range high, if we get a repeat of the range low, which is to say it looks broken, goes to the other side, looks broken, goes to the other side, I think that's actionable from a trading point of view, but from a medium time frame spot perspective, I don't think it's that interesting. Alternatively, I think the range midpoint is really the only support that matters for reasons stated. So if we were to get a nasty looking pullback there into the extremity, which wipes out a bunch of these lows and looks a bit panicky, I think that's really the only relevant, somewhat close to market area to do business on the long side unless you're breakout trading. For me personally, just some context and color. I don't know if you guys find this kind of stuff useful. Because I'm so bad at breakout trading on perps, surprisingly even slightly better with altcoins, but in general, Bitcoin breakout trading, I'm just not very good at. If I get a high time frame systematic breakout signal and I want to give it a chance, I will just take it on spot and not on perps. And that just gets me away from all the P&L watching, over managing, BitMEX, PTSD, anxiety stuff, sort of bad habits from the past. And it makes it such that I can let the trade breathe a little bit, as per my tweet earlier. So my way around it wasn't to kind of get better at trading perps in a breakout perspective. It was essentially to shift instruments. So high time frame breakouts, I'll take on spot. Anything else, generally speaking, perp oriented. So if we get a high time frame breakout signal, daily or weekly, I'll give that a go. If it fails, I'll put on the trader hat and look for the other side while licking my wounds. Alternatively, if it's not a breakout trade, the midpoint is the only area where, on a perp perspective, again, this is all short-term trading, I could look to be a buyer, because the alternative is, if the breakout fails, that's bad. If the midpoint fails, that's kind of the only relevant support, and 60k is really beaten up, and I don't think there's any longs between losing the midpoint and making its way to the range low. Like this area here, sort of this area here is where I will theoretically lose a lot of money if I trade it. So not particularly interested on that front. And again, I've sort of used this language of medium term, perp, spot, etc. Because bigger picture, if you zoom out, really not a lot is happening. This entire trend has been characterized by short consolidations and very fast resolutions, both the down moves and sideways patterns in general. Whereas here, it's just been a bit of a meat grinder. So honestly, candidly, if during this period you've managed to make some money, we haven't lost money, and you've avoided the boredom punts and low time frame trades that are just noisy and haven't sort of ventured beyond the confines of your trading system, I think that's a really good thing. And that kind of stuff saves you money in the long term if you just get rid of the boredom punts and the unoptimized bets. So this is just a very long consolidation. If you don't lose money in it, that's a good thing. And honestly, the next meaningful signal will come from some sort of volatility expansion. So if you do nothing between now and the market breaking out of this range, I think you'll be pretty well suited, which is why I'm sort of almost forcing myself to comment on these interim levels, because I mean, realistically, there's, you know, maximum 10% either way, and that seems like a lot, and it might be, but for how long we've been here, it's really not a huge deal. Yeah, that's pretty much BTC. We can have a chat if we get something spicy at the range high. We can have a chat if we get something spicy at the range midpoint. But where we are at the moment, we've just kind of had a muted reaction to both levels. The midpoint took us to the range high. The range high caused a bit of a pullback, but this is all kind of mental illness, because if you zoom out, we're still here essentially. And that's kind of it for BTC. On the ETH front, it's slightly more strained because we've already kind of reached an extremity. So if you'll recall, on the daily time frame, we had this level at around 3,600, and that kind of got tested on this really fast down move, and it's been holding on a daily closing basis. If you look on the 4 hour, you'll recall the argument was that the extremity in the context of this consolidation was this 4 hour lowest close and wick, I believe we talked about on Monday markets. I'm sure someone will correct me if I'm wrong. And that's essentially where the market is now. If anything, this type of structure supports the idea that the range midpoint for BTC is so important, because if BTC loses the range midpoint, which is not far from where it is now, then this 3,600 level on ETH is most likely cooked. And if you look to the left, apart from this sort of shelf we're resting on at the moment, we had a very fast, inefficient, chasey move to get up here in the first place in the form of this candle, right? Or this trading period. This entire move up is just sort of very rapid, aggressive repositioning as the ETH ETF odds went from 0 to 100, literally, in the space of 1 or 2 days. And I think the story of the market now, as far as ETH goes, is that we've had the period of the faster moving, savvier, crypto native traders, funds, etc., pivoting from no ETF ever to, oh my fucking god, we're getting an ETF. And we sort of blew a decent chunk of our proverbial load in this section here. And now this period of consolidation is waiting to see the actual meat and potatoes, which is to say the ETF flows. And so that's a lot more boring. I think it wouldn't be the worst thing in this instance. I mean, look, realistically, the two options that come to mind is if you were horribly sidelined for the BTC ETF pump, then if you just buy some spot ETH on the assumption that, hey, the ETF isn't going to be total dog shit, and I'm going to get a similar stream of price insensitive buyers to come in and fucking lift this thing, then we get to front run the flows and so on and so forth. Having some spot ETH, you don't babysit the trade too much, and it's kind of a disaster insurance policy against missing out BTC 2.0 ETF run narrative, FOMO, yada yada. That's not the dumbest thing I've ever heard by any means. I think that's somewhat reasonable, and at least from a technical perspective, if it really gets pukey sub 3,600, you can say, ah, fuck it, I fell for it, whatever, you know, it's not a huge loss. For me personally, I think at this point, given that the market is in this holding pattern post crypto native allocation, it's worth sort of waiting to see what the ETF flows are going to be like by the time we get the listing and approval and so on and so forth. Now, there are trade-offs involved in every single scenario, right? So if you take the, hey, I'm just going to buy some, I have a rough invalidation, you know, sub 3,500 or whatever, and if it doesn't work, it doesn't work. Obviously, you're putting the risk up front and you might eat shit if you're wrong about the ETF, right? Now, there's also a world in which case you're right about the ETF, it just shakes you out more in the interim. Fine, whatever. Those are the downsides, but the upside is you'll have a position in the first place, and you'll certainly have a good position if the market just chooses to do a BTC, and you have a consolidation around the ETF listing approval administrative window, and then it fucking goes mental. You'll feel pretty good about that. The other option is to wait and see what the flows are actually going to be like. The upside there is that if the market just essentially does this and pukes and fills this entire inefficiency, you feel really smart and think, aha, look at those FOMO news chasers. I knew it was priced in. Fuck crypto. I'm going back to trading the Bund or something. That's really nice. But the downside is you'll have to pay up if you're wrong, which is to say that if the ETF listing and actual inflows and all that type of shit is absolutely mental, and the market goes from a period of consolidation, lowish volatility, back to fucking ripping faces, then you'll either have to pay up for an entry, which is to say chase it and get a worse entry, or you might miss the fucking move entirely if your entry criteria are too conservative. Now, I'm kind of making a bet on the second. I'm fine with getting a worse entry if I have more certainty on my side, but maybe I'll regret those words because we all know I'm a terrible breakout trader and bad at chasing. But we'll see. That's kind of what I've opted for. And the argument, by the way, for shitty listing consolidation into resumption of uptrend, it would essentially be an analog of BTC at 44K, which is essentially here, where we got, this is ETF week, reclaimed the range and then just went fucking mental for this between 40 and 70k essentially. So if you're betting on ETH in that way, you're hoping for something similar, which is to say admin listing, actual ETF coming in, bullshit goes sideways, and then real ETF flows number go up. So it's just a question of, if that happens, how do you want to get exposure to it? Option 1 is early at a better price with the risk of being wrong. Option 2 is later at a worse price with a low probability of being wrong. And there's no perfect or right answer. It all depends on your strengths, weaknesses, the fucking instruments you use, your risk appetite, so on and so forth. But at this point, because I'm a conservative, old, washed up boomer, I'm more for option 2. But I think option 1 is totally reasonable, and at least the levels between option 1 and option 2 are the same, which is to say daily aggressively, it's 3,600 is the relevant TA level / must hold. If you want to be more loose with it, it could go, the other side of that cluster is 3,400, but I personally don't love 3,400 that much, simply because getting back down there on the daily time frame would mean we're dealing with a piece of shit failed breakout at that point and a breakdown from this consolidation. So not interested in 3,400 at least. But otherwise, that's at least how I'm thinking about ETH. And that's all I've got to talk about. I had a scan of altcoins. There was nothing hugely interesting. I had Bonk on my watch list because it was retesting this level earlier in the week at around 28, but then it kind of got choppy post-wick and closed below it and a bit meh. Maybe I'm being a bit too strict with this thing, and it might resolve positively on the weekly time frame, but daily time frame kind of bumped it down a little bit, and other stuff we can talk about on Altcoin Thursday. I just wanted to transparently talk about BTC, the context of this consolidation, while we're all zoomed in looking at this chart, no doubt, on the 1 minute. And I also wanted to talk about some of the ways to position or not position for the ETH ETF and the trade-offs of all those options. If this channel fades into obscurity and goes to zero and we quit, there's at least one thing that I hope that you've gained from it, which is that trading is about trade-offs. And whatever perfect entry system you have, there will always be trade-offs, visible or invisible, explicit or implicit. And if you know those, you will trade better. Bullshit philosophy aside, that's all from me. Thank you to Woo for supporting the show. God knows why they do it, but they have given us a link in the description if you want to support the show and keep us relevant. Hope you all have a wonderful start to your week, and I'll speak to you God knows when, hopefully later this week. See ya.